Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Tilray Brands, ticker symbol TLRY. And so here I am recording this on Wednesday, February 28th, during market hours. So this number up here might be changing. Currently right around $1.76, which was right around the price that it was when I recorded the last video last Wednesday. And so that was following, or during, I should say, this trading day on February 21st. And yeah, so I'm just going to go over some of the levels that stand out to me. Overall, I think the chart is looking really, really beautiful. I think that there are a lot of indications that we might be finding a bottom, so I'm really excited about that. And so yeah, I'll just go over some of the kind of technical patterns that do signal that, as well as the lines that we are respecting and or faking out around. And so basically what I went over in last week's video is how this did kind of look a little bit like a falling three methods, kind of a sloppy one because this candle doesn't really come up that high, but it did look like it was fairly bearish, and then we did see some downside following that. And then here we did hit a low on February 23rd as well as February 26th, and that low being $1.71, which you can see here marked by this white line corresponding to the base of this Fibonacci retracement here. So I'll go over some of those levels to the upside in just a minute. But yeah, I just wanted to point that out and also note that it does correspond with this yellow line that I have marked here at $1.72, which I'd gone over in previous videos. That's really just based on this low over here that was hit on November 28th. And then also from this Fibonacci retracement here, really just the low before this run up, that was $1.75. And so we've had multiple days testing that level. We did get a wick to 175 here on February 14th, and then just multiple days over here dipping below that level. And in last week's video, I had suggested that we might be dipping to $1.72, if not $1.70, potentially lower, and hopefully finding support there. And it does look like we have found that. And so some things that do stand out to me, we did get, this wick below 175 on the 23rd when we hit a low of $1.71. So that did not look too good. But then the following day, we got this cross here, this doji that was suggesting that there could be a reversal, there could be a turnaround. And while it doesn't look that good that we did get a lower close on the 26th, we actually didn't put in a lower low, and this signal suggesting a reversal, was something to be paying attention to. And then on the following day, so just yesterday on February 27th, we did get this big green candle going up just over 4%. And a key for that was that we got a close not only above the high that was hit on Monday, February 26th, with that being a price of $1.78, we also got a close up at this level, this orange line marked by this Fibonacci level here from this retracement. That's an orange going from the low on November 13th up to the high here from January 9th. And so that 786 level is at a price of $1.80.9 cents, right around $1.81. And so it does look like that has been acting as resistance. We've had multiple touches of that level, and that is actually what we closed at yesterday at a price of $1.81. So I do think that's a significant level that we need to be getting closes not at, but above. And so while we did get a wick above that level to a price of $1.84.6, so right up here, we got rejected from that level, ultimately closing at it. And with today's candle being red, down over 3% on the day, that is not suggesting there is strength, or at least not enough strength, to be getting above $1.81 or this red dashed line at $1.82, which corresponds with, let's see, going back in time, does look like, this had served as resistance for in the formation of this cup and handle gap and then some consolidation around that level over here. I do think that is going to be a significant level to be breaking above. And right now, while this does look good that we were able to close above Monday's high, we have yet to close above, not at, these prior highs. So 181 is going to be a key level to be closing above. And now with the high of yesterday being at $1.84.6, we need to see a close at $1.85 or higher to suggest that the bottom is in fact in. If the bottom is not in yet, then I would say we could be dropping down to this purple uptrend, which would be at a price of, let's see, right around, $1.70, so not much lower than the low of 171 recently hit. Or we could be dropping to this red line at $1.66, which does look like it served as support over there, and then also over here as well. So that might be another level that we could be returning to, or we could be returning to the low here before this run up that was at $1.66. I also had mentioned in last week's video the potential for the downside coming to here at right around $1.26 with the 1618 extension from this yellow retracement at a price of $1.26.2. So quite possible we dip down there, but I have not seen confirmation or any indications that we are going to be breaking below $1.70. But if we do get a close at $1.70, do keep that in mind that we could be continuing lower, but you always need to see two closes below or above these significant levels to show confirmation. Right now, that confirmation to the upside would be closing at a price of $1.85. 2 days above that level, and to the downside closing below 171, so that is 170 2 days in a row. But then to the upside, a level that does stand out to me, especially if I extend this channel over, is the 236 level from this retracement here. That is at a price of $1.90.6. And so I think that if we do get multiple closes above that level, that would not only be breaking out of this downtrending channel, but that would also be closing above this key level here that I think we need to be getting back above before we can see higher levels. But then the next one beyond that, in case we do skip it, would be the 382 at a price of $2.02.7. Right around that psychological level of $2 a share. That is going to be a tough one to break above. And if I do throw up the volume profile, we can see that if we are able to get above $1.90, perhaps getting rejected around $2, we could pull back to $1.90 and find that as support, as there is this nice volume shelf here. Or potentially, if we do break beyond the 382, we could get to the 50% level. And there doesn't seem to be much consolidation above that. But if we're not able to get past it, that would be at a price of $2.12.5. We could be returning to $2 and find some support around there. So yeah, I do think that there's a lot of upside potential for this, but I don't think that the bottom signal has yet been confirmed. I don't think that we are necessarily at the point of a clear reversal signal. But we are getting very close. I do think that there are a lot of fake out signals here. So it will be good to see multiple closes, two of them above $1.81, and then beyond that, two closes above $1.85. And then we could start to tackle these higher levels and potentially get to break out of this channel that we've been in for quite some time. And that would be getting to a price of, right around $2 and above $2, I'd say, from current price. Actually, depending on how long it takes to get there, if it's April, a month from now, or a little over that, $2 would do it. But if it's in the next couple weeks, we'd probably need to get to the 618 level here, and that would be at a price of $2.22.3. So hopefully we can do it, but do keep an eye out for $1.70 and lower, to the downside. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.